Hello, I'm Vadini Ariyam. In this presentation, I'm going to talk about credit transactions and suppliers' accounts. My new course, Bookkeeping Essentials, this is Lecture 7, Credit Transactions and Suppliers' Accounts. All this time, I have been talking about cash transactions and payments made to the supplier as soon as the goods are sold. Nevertheless, the modern day business operates its business mostly on credit terms. When purchases made on credit, the company get credit agreement for payment maybe a week, 2 weeks, or a month even. Therefore, correct record has to be maintained to avoid duplicate payments and missing payments also, because your credit history will get affected. A creditor known as a person who has supplied a product or service on credit, so money owed to the creditor. When a purchase made on credit, the amount posted into an account called the accounts payable. So you buy the goods on credit, and the invoice will be, you receive the invoice will be posted to the accounts payable account, which is a short-term debt that a company needs to pay another enterprise for the product or services acquired during the period of its operations. That means you have acquired a product or service during your period of operation from another enterprise. Here the ledger systems starts to change as you may be having too many suppliers. In that case, you need to have individual ledger accounts, because you need to show them the amount payable if there is a dispute. Otherwise, you will have problems. You enter then and there and create the individual accounts. In case if there is a dispute, you can show them. When you receive an invoice from a supplier, you have to make the necessary entries. Then when you make the payments to that supplier, appropriate entries have to be made to close the supplier's account. You cannot leave it open for a long time because it will affect the main accounts. Therefore, the two large accounts maintained, one is a purchase ledger when you are making purchases, and other one is the sales ledger, that is when you are doing sales, that I have explained in my last lecture. The total of the purchase ledger posted to the purchase account, the whole of the sales ledger posted to the sales account. Daybooks kept for audit purposes, entering all the purchases and the sales in purchase daybook and sales daybook respectively, because if there is an issue in the accounting system, the auditors have to go through the sales daybooks and the purchase daybooks to clear their doubts. There the entire shopping and sales are disclosed, are registered for checks in the event of any disputes. Purchase daybook. When a purchaser receives an invoice from the vendor, all the necessary information entered in a book called purchase daybook. The details in the invoice, such as date, name of the supplier, quantity, ledger folio number, and the amount. All the entries in the purchase daybook totals posted to the debit of the book and credited to the name of the supplier's account. All the totals will be posted to the purchase account, and also the purchase ledger, individual accounts. So the individual accounts is individual supplier's accounts is credited with the amount. If value is added, value tax is added, it's applicable. A different column is needed on the purchase day book. Therefore, the above entries are made in the books to maintain the credit transactions to avoid errors such as duplicate payments, overpayments, and missing payments, because you have to safeguard your credit score. That is why. Purchase ledger, sales ledger and purchase ledger are maintained separately. Particularly in large organizations, there will be different staff to handle the purchase ledger and the sales ledger. In an organization, purchase ledger clerk do all the entries for the purchases for the organization. In the accounting industry, several jobs done separately is purchase ledger, cashier, cash book, and bank reconciliations, posting, general ledger, everything is done differently. Then all that accumulated to create, so everything is done separately by different staffs. So all that is accumulated to create the profit and loss account and the balance sheet at the end of the financial year. The final statements help you to maintain a budget. The financial statements help you to maintain a budget and a cash flow for the company. The duties involve a purchase ledger clerk includes the following: checking invoices, calculate the VAT, making payments by bank transfer or check, reconcile supplier accounts, attend to suppliers' queries, filing the invoices carefully, and statements also, and the statements have to be filed carefully. This is all the purchase ledger clerk will do. It's same thing applies to the sales ledger as well. Sometimes both will be done by the same staff, but that depends on the management of the organization, how they allocate the jobs. The same procedure applies to maintain credit sales as well. In the big organization where they have massive sales and purchases, they have to have, if the sales and purchases are massive, they have to have the special staff to deal with the purchases and sales. I hope you understood the idea of creating purchase day book and purchase account and purchase ledger, how you post the things to the three books. I hope you understood everything. Thank you for listening to my presentation. Thank you. I will see you in the next lecture. Thank you.